Hello, ladies and gentlemen, and welcome to this afternoon webinar. I hope everyone has a great time so far. For some of you, it's afternoon. For some of us, it's afternoon. For some of you, it's late night. So without taking more of your time, and until Paul joins us, I would like to make sure that you are aware about the next guest on our Market Talk series, and that's Mr. John Bollinger. It's for me, it's an event and a webinar that nobody wants to miss. So please make sure you register for the webinar, and it's going to be in 29 days and 2 hours, as you can see here. So I would like to see as many people as possible on that webinar, simply because you can ask anything, whatever you need to ask to John Bollinger, especially about his Bollinger Bands. I think it will be the best person to answer any type of questions, right? Well, Paul just joined us. Hello, Paul. How are you?
Hello, Theo. I'm great. Great to see you. Welcome, everybody.
Awesome, awesome. So I just did my introduction.
Excellent.
So
Excellent.
I won't steal more of your time.
Fabulous. There you go. Excellent. Hopefully everybody can hear me, and hopefully everybody can see the slides there.
Yes, absolutely. Absolutely. I'm sure it's going to be a very informative, like all the other webinars, but I'm sure this one is going to be something a bit more interested to some people, how to refine and improve their price action. I think it's going to be something different.
Excellent. No,
you told us so far how to read price action, how to trade price action, but there are those adjustments, right?
Absolutely. Yeah, absolutely. Absolutely. Yeah, spot on right there, Theo. It's, whatever your trading plan is, there's always ways that you can improve it and develop it to make it better. And that's what we're going to look at today's session and over the next few sessions as well. Just helping price action traders just slowly but surely make their trading plan better week after week, month after month.
Awesome. I wish you the best luck.
Thank you, Theo. Thank you. Thank you. Good afternoon, everybody. Great to be here. Thank you, Theo, for the introduction. Yeah, as we said there, session 35, how to refine and improve your price action trading plan. So I could talk about that for weeks and months, all right? But, we're, of course, limited a little bit by time. So I'll be doing a part of it today. And actually, over the next few weeks, I'll be just adding more and more in terms of how to refine it, how to improve it, what are the elements we need to look at to make it a far more solid, a far more sort of focused trading plan. But, regardless of whether you've just started your trading journey or regardless of whether you're, deep into your journey, there'll be something here for everybody to take away and learn and basically utilize in their own trading. And I also recognize we have a truly global audience who join us these days and stuff. So it's great to see you here. Wherever you're joining us from in the world, you're very, very welcome. Great to have you on board. And we hope that we here at Admirals, we hope that you're having a great year and enjoying these rather interesting and eventful markets. As always, here we are at Admirals, okay, Forex CFD broker with a global presence and local support, licensed and regulated across a wide range of regulatory environments, providing competitive spreads on the most popular trading products and allowing the opportunity to engage with markets on both MT4 and MT5. If you have any questions about Admirals, please get in touch with your account representative and they'll be very happy to help guide you. So, as always, we talk about, each session, what is price action trading? Because I do recognize we have people who are A, new to trading, B, new to this sort of series. But not unsurprisingly, we're going to talk about, improving your trading plan. So we'll talk, a little bit about why is your trading plan important? What do price action traders need to be aware of? And how can we actually improve our price action trading plan? And so, as I said, it's going to be like a little bit of a start. It's almost like a little mini series within a series in terms of, taking what we've learned so far and then just making it better and better and better and improving it and refining it. So we will cover little parts of it today, and then actually over the next couple of weeks and months, we'll add to that. So invariably what we'll be doing is building a really good, tight, focused price action trading plan. And aligned with that, well, we'll have a little look at the live markets. It's been a rather interesting week or so since I last spoke to you in markets, and we'll have a little look and see what that actually entails. Osman says, nice to see, great to see you too, Osman. Great to see everybody here. Okay, as I said, it's fabulous to see people joining us for our sessions. Really enjoy it. And as always, if you've got questions or comments, you're very welcome to put them into the chat box. We'll do what I can to help you in your own trading journey. Because for those who don't know me, I've traded for many years, traded for funds, for clients, right? I primarily like to focus on FX indices and commodities for myself. I tend to be a trend trader for swing position traders, and I tend to be a reversal trader for sort of shorter term aggressive trading, elements of both which, come in throughout this entire series. So yeah, as always, the starter is that invariably what we're looking to do is to help new traders, because sometimes new traders can be a little bit intimidated by the amount of knowledge required to be able to analyze markets. However, a little bit of education, a little bit of understanding of price, a little bit of understanding of how candlesticks are formed and what they're telling us, then it becomes easier to analyze and understand markets. So each Wednesday we've been building on session by session in an effort to help just educate you and inform you how to use price action in your trading, but also use it as a way and a means to get better as a trader in generally, because we're all on that journey. And if you haven't joined us yet, if this is the first time, really, and you need to trade price action, it's really just a simple way of utilizing the movement of price over time as a means of analyzing markets. It is popular with both retail and institutional traders. But, we'll tend to focus on price action over the last 3 to 6 months, because I recognize a lot of the people who join us, they're probably not trading full time. They're trading around lifestyle commitments, another job, family, maybe caring for parents, maybe your businesses you have to run. So just looking at, trading that could be done as a swing trade or an end of day position trade, that's where we'll focus on. But I say it every week, namely, once you've learned price action, it's like a great bedrock to have as a trader, and it allows you to basically operate in any instruments and any time frame with a degree of confidence and capability. In this session list shows you how much we've covered over these last few weeks. Okay, lots in there. And once again, I say it every week, I try to cover the hard elements of trading. Okay, the hard skills of trading. So things like putting a trade on, trade setups like, as you can see there, engulfing candles, star formations, key reversals, pin bars, etc., pullbacks, etc. And then also the soft skills, a little bit like what we'll talk about today, is about how to refine and improve your behavior as a trader. So we've talked about preparing for opportunities, creating routines, checklists. We've touched on building trading plans in the past. These are the skills that new traders sometimes don't recognize how important they are, but the longer you trade, ladies and gentlemen, the more that they will become important, and they will become part of you building your own trading business. And that's where we want you to have a long and fruitful trading journey. So remember what I said, and we're going to go into this deeper. I'm not going to go into this much because we're actually going to be developing this as we go on later in today's sessions. But we said about having a very simple routine. Okay, 10 steps. First 5 steps, very simple. Whenever you open a chart, doesn't matter what it is, euro, dollar, Bitcoin, gold. First thing you do, you're defining levels of support resistance. Step 2, is there a trend? Good trends leap off the chart. You don't have to force it. Okay, if you are forcing it, it probably isn't a trend. So cut it. What we're looking to see is, how does price react at those key levels, right? At those key support and resistance levels, because in an uptrend, we want an opportunity to sort of, buy at support. In a downtrend, we want to be able to sell rallies at levels of resistance. And the way we do that is by looking for step 4, which is for a price action trigger at those particular levels of interest. But it's also worth knowing, is it part of a bigger chart pattern? You don't want to basically, be walk into a trap. All right. What we want to do is look and see, does that actually help support us in our decision? Now, there's another 5 steps which we will go deeper into over the next few weeks, but we're going to unpack that a little bit more, okay, for traders. When it comes to price action, we know that we've covered plenty of sessions on individual asset classes. So we know that price action lends itself to all price actions, okay, all instruments and all time frames. But we're going to focus on, in FX world, the dollar index and 28 of the major pairs, the major and minor crosses, the major indices in the world, so the American ones, SP 500, Dow, NASDAQ, FTSE, or the global indices, some commodities, oil, gold, silver, etc. Can look at equities, okay, and even look at crypto. Now, I say that every week that it's quite a big list, and the reality is that what will happen is that as you grow in experience and confidence and knowledge, you will probably refine that already. You will probably start to look at focusing on that and making it just a little bit smarter and a little bit more suitable for yourself. And that's absolutely fine. It's, we just start broad, and then we start to focus in depending upon, how our trading's going, which we will lead us into in a moment. So, as it says there on our slide, we've been on a price action trading journey, for a good few sessions now. We've covered a lot of the relevant topics in these sessions, all of which are available on the YouTube channel. So, if you've missed a few, or if you need to be reminded of a few, go onto the Admirals YouTube channel. You'll find us on there, okay, and be able to go through, at your own particular leisure to help you sort of, improve your knowledge, gain a little bit of insight, and just be a little more confident in terms of understanding and utilizing price action in your trading. So, well, as I said earlier, this is actually a bit of a good opportunity for the next few sessions to help us refine and improve our price action trading plan. Today, we'll look at developing our goals, our plans and routines, just fleshing them out a little bit, just starting to look at them, okay, just to basically help us refine and improve. It's not the sort of thing you can do in like half an hour. You need to work at it and take a little bit of time and understand that, okay, and we'll go into that more and more over the next couple of sessions. So when we're looking at trading plans in particular, and this is probably a good time for me to ask, those of you who are joining us today, how many of you actually have a written trading plan? How many of you actually put that into reality? Be interesting to know. There's no judgment, okay, if you haven't or not, but it'd be interesting to know of those of us joining us today, how many of you actually do have a good and full trading plan, right? It's interesting to know. We did a session on that, I think it was maybe session 9 or session 11, okay, that we did one on, and of course it's as I said, you can go back and find that on the YouTube channel. But it would be interesting to know, of those of you joining today, how many of you actually have a trading plan constructed, because for as long as I've been doing webinars for Admirals, I've always stressed that, you should focus on what you can control with trading, okay? Markets are huge, they're dynamic, okay? They are in some respects, and some very small respects, limitless in terms of, how you can engage with them. And so it becomes quite easy for traders to become a little bit intimidated, a little bit overwhelmed, and then with that overwhelm, we tend to get into things like analysis paralysis, or we start to actually sort of just make sloppy, knee-jerk decisions, neither of which take us into good places as a trader. And I've always said, focus on what you can control. And as price action traders, that means, ideally what you want to be, plan your trades, trade your plan, manage your risk. All right. If you're doing those 3 things, okay, if you're doing those 3 things, then you're doing the main elements of what you can control as a trader. That's a good starting block. Okay, good starting block to begin your journey from, right? Because as you grow and improve, then you improve that and you refine that. But be honest with yourself. How have you been doing that? All right, how has that been going for you? Have you been planning your trades? Have you been trading your plan? Have you been managing your risk? Okay, be honest with yourself. All right, you're under no obligation to be honest with me. Okay, if you want to put your own comments in the chat box, I'd love to hear them, and I'll help where I can. But the reality is, you've got to be honest with yourself. All right, you've got to be honest with yourself. Okay, if you're not doing that, well, that's why these sessions are here. Right, that's why these sessions are here, to help you, sort of get to grasp with these sometimes, let's say, thorny nettles. I've got that long. Nettles aren't really thorny, are they? But you don't want to be grasping them anyway. But it's a case of, be honest with yourself. If you've not been doing it, why haven't you been doing it? What prevented you for it? And if you have been doing it, well done. Then how do we improve? Okay, how do we improve on that? What do we need to do? And as I said, over the next few sessions, we'll look at how we can focus on that. So, I talked in many of the earlier sessions is about, I personally think that a trader should almost like have two plans. All right, a tactical trading plan, okay, which is how you engage with the markets on a day-to-day basis. Think of it as like your tactical trading plan, the sort of 10 steps we go through as part of this price action journey, and then also at a bigger level, a kind of a strategic business plan. Really how you plan to run and build your business, and that that's a broader, deeper conversation to be had. But I always kind of imply to traders that they should start. All right, the old saying of Rome wasn't built in a day. Neither is your trading business. But if you start doing the right things, okay, start implementing good habits right from the beginning of your trading journey, well, it just gives you a far better probability of a better outcome for you in your own particular trading journey. So today, over the next few sessions, we're going to focus on improving your tactical trading plan, because I recognise that the majority of people here may be new to trading, want to start to work on that. So we're going to start building it out a little bit by little bit, and adding it. And as I said, hopefully you'll see these kind of jigsaw pieces start to click together over the next few sessions. And the reason is, I never apologise for putting this quote up, because I think it's absolutely fabulous and very, very relevant to trading. I've learned it my own self, namely that strategy without tactics is the slowest route to victory. Tactics without strategy is the noise before defeat. Sun Tzu, the legendary Chinese general, from thousands of years ago, he was spot on then, and it still is valid today. And it is valid today in your trading business, building yourself a trading business. We need to have an overall strategy, and then we need to have tactics, okay, that we can implement on a day-to-day basis that help us move us forward and where we want to go. Well, very often I see lots of traders who are operating like the second one, namely they've got tactics but without any real strategy, and it's the noise before defeat, as Sun Tzu says. And as I said, we're going to build upon a little bit upon that. I know there'll be lots of people who will sit and watch and say, well, do you know what, Paul, I don't need to do any work on either a tactical trading plan or a business plan for my trading. I just like to flip open my laptop, or I open up my tablet, and I just like to crack on with trading and stuff. And a lot of people will do that. All right, a lot of people will do that, and you've got to really ask, well, why bother with it? Well, I've coached many traders over the last few years. Okay, many traders did, and without one, I find that traders either they struggle with, either they become a little bit overconfident. Okay, if they've had a few winning trades, they become overconfident. Gives them an element of a need for variety. Okay, some of the traders need a bit of excitement in their lives, and they feel as if they need to be trading. Okay, if they're not in front of their charts hammering keys, they don't feel like either A, that they're working, or B, that they are a trader, or that they have issues with self-worth, etc. And all of those things, as I said, kind of leads traders off the path they're right, and into the, let's say, into cul-de-sacs of one sort or another, whether that be literal or figurative. And so, believe me, all right, it is something that you might think you don't need, but take it from me, all right, take it from me. And all the many years that I have traded for myself, traded in funds, traded on trading floors, been around other traders, all right, I have never met any who have been sustainably, consecutively successful that have not had their trading plans. Okay, they don't have to be perfect. all right? It's an organic document. It grows as you do, but by the mere act of creating a strategic business plan and a tactical trading plan, it starts to make you focus, right? Starts to make you focus on some of the elements we're going to talk about now, and that can help you. It can help you from getting distracted and help you from being sort of dragged off down down dark lanes where you don't particularly need to go. So if you haven't done one, all right, and if you're looking to start one, okay, or you need to refine what you have, well, let's start. Where should we start? Well, my ideal starting place is for you to start with your existing trade data, okay, when you're looking to refine and improve your price action trading plan. So the question comes to you, have you been keeping good trade records? Have you been keeping a spreadsheet of all your trading, or have you been keeping a journal of all your major trades? I appreciate these days there are some absolutely fabulous, all right, there are some fabulous commercial tools that you can, you could choose to purchase, all right, if you wish, that can do an awful lot of the work of spreadsheets and journals, all right, and my personal view is that anything that helps you get better as a trader is a good investment, okay? And so, if you wish to go off and check and find them, that's absolutely fine. But equally, you can start by just having a very simple Excel spreadsheet, and even just a simple journal that you fill out for every trade. And the reason is that basically, by keeping that good trade records, by creating your own data, I assure you that will accelerate your progress as a trader faster than anything else. We have here at Admirals, we have Dr. Alexander Elder. He does, some fabulous webinars for us, every few weeks. If you read any of his particular books, he talks about actually keeping great trade records is crucial, right? Crucial to your progress as a trader, and I back that 100%. So, if you have been keeping trade data, fabulous. It's a good place for us to start. If you haven't, or you're being a bit slapdash about it, you do it when you can be bothered, or you do it when you have winning trades, but you kind of ignore it when you've had a couple of losing trades. This is your chance to stop. All right, it's your chance to stop and reset yourself, okay, and basically make a commitment to yourself that from today onwards, you'll keep a spreadsheet of all your trade data, and also you'll keep a journal, right? Keep a journal about the trades, but also how you felt, how you acted, okay, because that in itself it is a proper gold mine, all right? It's a proper gold mine, and as I say there, mining that data will accelerate your progress faster than anything else, ladies and gentlemen. All right, because everybody has their own particular way of trading. There might be principles that I espouse here, and there's principles I have in my own trading. There's principles that are generally accepted to be good, like plan your trade your plan, manage your risk. But everybody will have their own little way of doing it, their own little way of doing it a little bit differently, and you need to understand which are the best ways for you. So, if we're going to improve our price action trading plan, what we want to be doing is examining our trade records, and we can ask ourselves 3 very simple questions when we do that. And what I normally tell people is you should do it at the end of every day if you've been trading, definitely the end of week, end of month, and end of quarter. Examine your trade records, right? Ask yourself, what have you done well? What have you done well? Sometimes I find when traders call me up looking for help as a trader, it's normally because they've had a bit of a challenging time, and they have lost, they've lost perspective, and they think all their trading is terrible, all their trading is horrific. They just basically want to, as we would say in the UK, they want to throw the baby out with the bathwater, scratch everything, start with a clean sheet of paper, start again. And I try to sort of say, well, let's just take a look at what you have been doing. What actually have you done well? All right, what have you done well? Because we want to leverage that. We want to build upon your strengths, build upon the good practices that you have, even if it's just one thing, even if it's one thing that, you never trade without a stop loss, all right? You always traded with a stop loss. Even if it's just that one thing that you can look back on, it's a starting point, okay? We'll leverage from that. But equally, you always have to be honest with yourself when you talk about, well, what have you done poorly, okay? What have you done poorly? What have you done that needs to be removed from your trading? So, maybe you're over trading, maybe you're over risking, maybe you're trading too many instruments, maybe you're trading too big a size, okay? Maybe you're just putting on too many trades. Maybe you're not putting any trades on at all because you're really fearful. Maybe you cut your trades far too early, okay, so you're grasping at any small amount of profit. Maybe you've not been trading with a stop loss and just hoping the trade will turn around for you. All of these things, okay, be honest with yourself. Be honest with yourself. What have you done poorly? All right, what have you done poorly? The final question, what do you need to improve on? So there might be areas that are of development. I will tell you, as a trader, that never goes away. There are always areas that you need to improve on. There's always areas that you can develop. Okay, it's never, oh, I do that for 6 months and I'm done. It's never like that at all. You know, by the very nature of engaging with trading and markets, will effectively make sure that you keep improving. Okay, you need to area develop. But so I say, get your trade records out, go through them. Make a list. What have I done well? What have I done poorly? All right. What do I need to improve on? Leverage, remove, develop. Okay. This is what we're looking to do as we start to build a case for how we can refine and improve our price action trading plan. And I took a couple of examples from some clients of my own, all right, who just answered these questions, just to give us a little bit of insight. Maybe you've seen these, maybe you've experienced them, maybe you've done them. That's absolutely fine. So comments like when you ask them what have you done well, okay, what can we leverage? Well, follow my plan for 90% of the time. We'll really be wanting to be getting towards 100%, but it's all about progress. Traders who've done well, they've managed their risk throughout that month, or they've avoided stupid impulsive knee-jerk trades, or they've captured all their trade data, or they've recorded and reviewed every one of those trades. These are all good things. They've done well. Those traders have done well in that period. What have they done poorly? Taken 2 to 3 off-plan trades, okay, during that month, right? They've gone off the ranch, right? They've had a specific trade plan, and in fact, they've been distracted and gone off and done anything well. That's something they need to remove, all right? And that's something that needs to move. So, one individual tried to trade around news events, and they did poorly. Okay, they did poorly. They didn't do it very well at all. And that's okay. All right, that's okay. It's all part of it. As I say, be open and honest about what's been going on. Because invariably that might be something that just needs to be removed from that individual's trading. Okay, that they thought they could trade around news events, but it just wasn't there. It wasn't their skill set. So just remove it for the moment. There's also areas like, what do they need to improve on? Okay, what do they need to develop? So, traders put in things like they need to understand the certain impact of certain news events on their preferred instruments. That might have something to do with the comment in column 2 about doing poorly around trading news events. Also, things like need to remember that everyone has losing streaks as part of trades. All right, it's part of trading. So you will have losing streaks. Okay, you will have losing streaks where you may have 2, 3, 4, 5, 6, 7, 8, 9 losing trades on the trot. That happens to everybody, all right? That is part of trading, all right? And recognizing that. Need to remember to take proper breaks from trading, okay? You're human beings, you're not a robot. And so invariably, if you're sitting there all day, every day, your performance declines really rapidly. You get burnt out much, much quicker. Things like need to improve my understanding of certain trading metrics, okay? Understanding what positive expectancy means, okay? Understanding how that comes from a relationship between your hit rate, okay, and between the size of your average winning size and your average losing size, okay. And I need to improve my milking of winning trades, namely, how do I stay in winning trades longer? How do I actually add to it and generate extra elements? So those are just comments I've taken from other people, okay, who I've worked with and who've put in an answer to those questions. And if you haven't done it, do it, okay? Just sit down. What have I done well? What have I done poorly? What do I need to improve on? Just be honest with yourself. It's absolutely fine, ladies and gentlemen, but it's all part of us just getting better and better and refining and improving our price action trade plan, because our future goals can come an awful lot out of those areas of what we need to improve on, okay? And even if you're just having one little goal every month to work towards, that can actually help you, okay, in terms of developing yourself into a much better trader. As I've said in reply, basically, when it comes to your trading, you want to be doing more of what works and less of what doesn't. And that is easier to do in terms of easier to make decisions about that when you have good data to work with. So, if you've been keeping your good trade data, fabulous. if you haven't, just make a commitment to yourself today, ladies and gentlemen, to start doing it, because it will help you, accelerate your progress faster than anything else. And also it also allows us better goals to be created, all right? And that kind of links into, what we want to be working on in terms of our trading plan. And those people who know me will know I talk an awful lot about absolute versus relative goals. So I'm a big fan of relative goals in trading. So, absolute goals is, that's an absolute goal that I will generate 2,000 pips a month in the FX markets. That was a goal that was given to me by one of my own trading mentors many years ago. And at first, it's a little bit inspiring, it's a little bit motivating, because, you think, well, of course I want to generate 2,000 pips a month in the FX markets. That's a great goal. Yeah, absolutely. Fabulous. Fantastic. That's my goal. The problem with an absolute goal is that if you don't achieve it, well, then it starts to become almost like a stick to beat yourself with, because and this is what actually happened in my own particular experiences. That many years ago, my mentor said, you are to make 2,000 pips a month in the FX markets, and unfortunately, I didn't get anywhere near it. Okay, I was, 1 month I was making 250 pips, then 300 pips the next month, then 350, then 400 pips a month, and I felt as if I was a failure. I was a failure as a trader because I couldn't hit that 2,000 pips a month target that my mentor had arbitrarily given me, that absolute goal. The reality is that actually when I looked at my data, well, I've been profitable every month. And not only had I been profitable, every month I was just getting just a little bit better, okay, just a little bit better. And this is where I realized that actually relative goals, setting goals relative to my own performance, rather than just some absolute goal, someone that's just been set by somebody else that I have no experience of achieving or no real understanding. That was basically the absolute goal, was a stick to beat myself with. Relative goals was something to actually help me develop, all right, month by month by month. And so, you can have relative goals like, well, for the last 3 months, I've generated at least 4 units of risk every month. For the next 3 months, I'll target achieving a MAP, a minimum acceptable performance, of 5R per month. So, you've come from a place of, achieving, let's say, 4R every month for the last 3 months as a developing trader. Well, actually, my target is now to try and achieve 5R a month. So, it's not an arbitrary, just basically set out goal. It is a goal relative to what you've achieved, but also just stretches you just a little bit. Okay, just stretches you a little bit. You're going from trying to achieve, you can achieve 4R. Now we're going to try and achieve 5R. Okay, and that's it. Just effectively keeping it simple, just keeping it, developing it, making it basically a goal relative to your previous performance. And I hope that maybe you can see the difference there, okay? So, have a little look. If you have set yourself goals as a trader, as part of your trading plan, have a little look at those goals that you have set yourself. Have they been absolute goals, or have they been relative goals? Are they absolute goals because of something that you want to achieve, like very outcome-based? Or are they performance and process goals that are relative to your existing performance? Okay, just take a little look at that and utilize that as a way, and it means just to start to set yourself a few goals and objectives going forward. So, that's about us looking at our previous actions, looking at our previous trade data, making sure that, we have elements of, what we need to leverage, strengths we need to leverage, okay, bad habits we need to remove, and areas we need to develop. And let's start to break into, our trading plan, and let's start to refine and improve it. Now, what I've said is, as we said earlier, in terms of creating that routine, whenever you open a chart, the first step is, define levels of support and resistance. Okay, well, what does that mean? All right. Well, as we say every week, start at that monthly, weekly, and daily charts. Right. Draw in levels of horizontal support and resistance, areas where price has reacted to. You look at things like dynamic levels of support resistance from what the big moving averages like the 20, the 50, and the 200 offering, and also big round numbers. So, like gold was $2,000 recently. That was the big round number on that, okay, that people were relative and interest to. Just making sure that you've got this started to write down, okay, drawn down, and what does it actually mean to you? How do we look to improve this as we go forward in the next couple of sessions? Step 2, all right, define if there is a trend. Remember what I say every week. Good trends are very clear, okay? Good trends are very clear. You have to remember markets only trend 20 to 30% of the time. So you also have to recognize that trends always overshoot and they undershoot. That is part of the gig of trading, and we'll talk more about that in a future session. The reality is that we're trying to define if there is a trend because we're looking to ride a trend, not fight a trend, okay? As a new traders, what you want to be doing is looking to see, well, how can I basically, ride that trend? And ideally, what we'd like the weekly and the daily charts to be aligned in their trends. When there's a good trend on the weekly and on the daily, well, that gives us confidence, right? And that gives us confidence that we're in a good, strong trend. And it's something, as I said, we want to try and fight. We want to try and ride rather than fight, okay? Fighting strong trends is generally not a terribly smart way for new traders to be operating. So that's what we're looking to do. Step 3 is, remember, we're looking to see how does price react at key levels, okay? Key support and resistance levels, because, as I said, in uptrends, we want to buy on a pullback at support, and downtrends, we want to sell, on a rally at resistance. Those key levels can be horizontal support and resistance, okay? The static ones we've drawn in can be those dynamic moving averages, all right, which I like myself, and they can also be big round numbers, right? So just make sure you're just very clear on what that actually implies. This is us just basically the first steps to getting clear on a price action trading plan, and we'll start to look at how we can develop, how we can refine it, how we can improve it. And well, step 4, all right. Step 4 is looking about price action triggers at those key levels. Well, we need some simple price action triggers, things like key day reversals we've covered, star formations, engulfing candles, inside bars, pin bars, and in a few weeks session, what we're going to do is actually, what ways can we enter on those triggers? We want the triggers, but what ways can we actually refine and improve our exact entries, okay? Because that's what people like. So keep your eye out for that particular future session. But it is a case of I'm going to look more of it in a particular moment. But in an uptrend, when price, remember we're saying price pulling back, okay, and it's giving us things like pin bars, very strong pin bars there in a trend, okay, the pullback of a trend. That's the sort of thing we're looking to do, and we want to just get clearer and clearer and clearer on what it is we're actually looking for and what we're looking to achieve. And also step 5 is it part of a bigger chart pattern? All right. Now, on a grander scheme, we don't want to be buying into resistance because there's likely going to be a reaction, nor do we really want to be selling directly into support because there's likely to be a reaction, okay? What we want to be doing is, well, is our entry a part of something like a continuation pattern, like maybe a flag or a triangle? In this case, it was, price actually did flag, price was in an uptrend, okay, before it flagged down, before it continued on. Or is it a case of a, reversal pattern? If we're looking to buy here, and actually what we're seeing is, is a double top, far away from the moving averages, well, then invariably it looks like we're probably buying into resistance, we're buying into a reversal pattern, perhaps not the smartest move, particularly for us. So let's have a little look at an example before we go to the live charts. All right. So this is trades from last week. Okay. Swiss franc against the Japanese yen, May 2023. The weekly chart. Okay. You remember what I was saying? A good trend leaps off the chart at you. Okay. And that's what we've had there. We had a bit of an interesting pullback into the start of the year. But basically, you can see for yourself, we're above, the 50, definitely above the 200, okay, and we have been in an uptrend there, okay, a very strong weekly uptrend. and that's a reflection in the FX markets of, Swiss franc has been very strong, Japanese yen has been very weak. This is what we'll talk a bit more about in next week's session, where we'll refine our session by improving our watch list, making sure what we're looking at first and foremost is in the right ballpark, so to speak. Then we look down onto the daily chart of the Swiss franc against Japanese yen. Excuse me. We look over the last couple of months. We've seen that kind of weekly trend. Well, we have basically had daily trends, a bit of a messy pullback there, but that basically, let's clear into it. That pulled its way back into a double bottom, which then basically gave us a bit of a flag pattern, and that's what we've had here. Okay, flag patterns as we move up there. Okay, and that's what we've been looking at over the daily chart. The weekly chart has been in an uptrend, the daily chart has been in an uptrend. So what we're looking for are ways and means and opportunities to be able to buy into that on pullbacks. Okay, on pullbacks, either things like 3-bar reversals, pin bars, etc. And then when we go down another example for last week. For the Swiss franc against Japanese yen, we know we've been in an uptrend in the Swiss franc Japanese yen on the weekly. We know we've been up there on the daily. But what we can also see is that when we're on the 4 hours, okay, for our entries, we can see that once again, price is back above the 20, above the 50, above the 200. It's been in a very clear. It was in a very clear uptrend 2 weeks ago, okay? Very nice, clear uptrend, okay? No problem at all. And then actually what happened is, we had a little bit of a pullback, didn't we? A little bit of pullback, and actually, we had a bounce off support. All right, we had this pin bar here, which actually just kind of went sideways, and then unfortunately got taken out. And and lots of people would be a bit disappointed, thinking, well, hang on a minute, what's Paul been talking about? But that can happen. All right, sometimes if you're trying to buy a pullback, sometimes price just needs to pull back a little bit further. And very much into this range here between the 20 and the 50, pulling back. But then actually we had 1 pin bar, we had 2 pin bars, we had 3 pin bars before price rallied its way there again, rallied its way all the way up into the end of the week. Now, for me personally, what I suggest is for new traders is that when you're taking swing entries, okay, on like 4-hour and daily charts, once you're probably looking to basically to effectively close out positions before the end of the week. Or if we do see prices start to really accelerate, really start to pull away from moving average, it's probably going to get a little bit elasticated. And get a little bit elasticated, more likely to get a little bit of a pullback, and that's actually what we did. And you can see there actually in the 4-hour, there's a very scrappy double top there. But that is just a case of, we're going to use this example to look in the next sessions about how we came about that on our wish list, how we entered into it, what could we do to refine it, how could we improve it in terms of, basically milking our particular trades. But that's just one example of just following the routine, okay? We're looking at drawing in levels of support and resistance, all right, monthly, weekly, daily, okay, because they're on there. Starting to look at, is there a trend there, okay, when there was a trend, okay, on the weekly and on the daily and on the 4-hourly, looking for, how does price react at key levels, okay, when it either pulls back to, big drawn in levels of support resistance, or whether it actually basically, pulls back to ranges, zones, moving averages, dynamic support. Then does it give us, step 4, does it give you like price action triggers, which, it did here, gave you 3 of them, 4 of them, gave you 4 of them, 3 of which worked. And then also the case of, well, is it part of a bigger chart pattern? And in this case, it was also a bit of a flag pattern there as well. So you're just following this routine, okay, just getting it tighter, getting it sharper, getting it smarter, all right, every week. And, and by doing that, and we'll go into basically managing that trade, okay, one of the future, how do we improve managing our trades? How do we improve our entries? How do we improve our managing the trades? How do we actually look to effectively sort of try and get the best out of our particular winning trades itself? Well, that's one particular example for yen. So before we switch across to the live charts, is this kind of first part of refining and improving your trading plan? Take a look at your present trading plan, okay? Do you actually have them? If you don't, that's okay. This is your opportunity to stop today, all right, and make a start on it. Okay, make a start to look through, go through. Okay, it's it doesn't have to be perfect, but just start. Okay, start building that trading plan. Take a look at your existing trade results. All right, and again, have you been keeping records of your trade results? If you haven't, all right, well then now's your opportunity to start. Yes, you will find that on the Admirals platforms, the MT4, MT5, it will keep a list of your trades, but it's your responsibility. Okay, it's your business. Start keeping an Excel spreadsheet of your own trades. Start writing a journal of those trades. Okay, looking at what did I do well? What did I do poorly? What do I need to learn from and develop for my future traders? Okay, and as it says there, go through that and start to ask yourself those questions. What have I done well? What have I done poorly? What do I actually need to develop in my own trading to improve? And with that, especially in terms of development, can I reset some new goals relative to my present performance? Is there something that I can look at that? And the key word there is relative. All right, setting some new goals for yourselves relative to how you have performed recently. All right, so as I said, take the good, the bad, and the ugly out of your existing trading. Okay, take the time to look at that. I'm very fortunate in that I love going back through my trade data. I actually really enjoy it. I find it fascinating. I find it fascinating that I am not only am I looking for trends in markets, but I'm also looking for trends in myself, right? Trends in my own trading. I'm looking at why is that happening? What's happened? How can I improve on that? What do I need to do to reduce my those kind of behaviors? I find that fascinating because it's all part of me getting better as a trader, or every day just trying to get 1% better to tomorrow than I was yesterday. All right, and working with that, and that is anybody can do that. Okay, then there's no hidden secrets there. Okay, there's no special technology you need to buy. Okay, it just involves you just doing a bit of the work. Okay, to basically become the best trader you possibly can be. So to conclude this part, okay, this first one of the parts, okay, is price action is just really is a way of analysing market, and it gives us an opportunity to look for particular price action triggers at significant levels, prices, or zones, and that allows us to build and then improve our trading plan. The important thing is first for us to have a plan, all right, and be honest with yourself. If you haven't, that's okay. Just take this as a learning point to improve, because I said I've yet to meet any long-term sustainably successful trader who does not have a plan that they have created, built, worked, and refined as they go. Then review your trades. Okay, take a look at your trades. Review your trades. Review the plan that you have so far. Okay, how can we improve it? All right, how can we improve it? What have we done well? What do we need to remove? What do we need to develop? Just start to look at that. Okay. What new goals do we need to set? And if we are setting new goals, take a moment to look. Is it an absolute goal, or is it a relative goal? Is it an absolute goal that somebody or something wants to set for me, or is it a goal relative to my own previous performance? And then also, can I improve my routine? Okay, I give you there'll be 10 steps of a very simple tactical trade plan. Can I improve my routine? Is my routine clear? Is it clear to me? Do I understand what I'm doing? Do I understand why I'm doing it? Because all of this will start to filter through into the way we look to look at those particular markets. So we've just got a minute or two, okay, left. But just before that, let's just remind you to join me next time. Okay, so next Wednesday, 7th of June, on our price action trade, we're going to go in another bit in terms of how to build the watch list. So as I said, we're going to do lots of different sessions here that all look to refine and improve our trading plan. But one of the elements that's important for us is, how do we build a watch list? All right, how do we actually build a watch list? What is it that we need to be doing first and foremost? All right, so we'll talk about why it's important, what traders can do to help create a watch list, and what's the best way to use that watch list with your price action trading plan, all part of helping to refine and improve and develop and grow your price action trading plan. So that's London. Okay, London, 2:00 next Wednesday, 7th of June. Check your inbox for the webinar link, or head over to the website to sign up. If you want to contact us, you'll get a feedback form after the end of this session. Is a case of you can contact us there. You see global@admiralsmarkets.com there. By all means, any feedback or thoughts, you're very welcome. Osman says, to be honest, I'm working on improving my trading plan. I like the idea of 2 plans, tactical and strategic. Thanks, Paul. Best regards. You're very welcome, Osman, and it's very good. And, and I say this to Osman and everyone, just start. It doesn't have to be perfect, okay? It's okay, it's not perfect, but just start. It will, as I said, it will just get your brain thinking about your trading business, start getting you focused, okay, on what are you doing? What am I doing well, okay? And there will be some things that you are doing well, all right? You don't need to beat yourself up, all right? Some things you're doing well, but what are the things I need to remove? What are the things that, they're hindering me, they're not helping me, and what are the areas that I need to develop? And everybody will have them, okay? That's almost like a never-ending journey in itself, your own progression and development. But do that, okay? And utilize it as a way to start, okay, refining and improving our overall trading plan in order to make us the best traders that we possibly can be. All right, so I'm just going to switch across to the live charts for a moment and stuff, and we'll have a little look about what we've chatted about there today. So just bear with me 1 second, ladies and gentlemen, and we will do that. We've only got a minute or two left, but let's have a little look. What have I got? Here. So I think this is, I've been looking a lot at yen recently. So here's an interesting, here's the dollar against the Japanese yen, all right? And let me just, as you can hopefully probably see, is, starting in the monthly chart, just drawing in, okay, particular significant levels, levels, you see the fractals there, where we have seen the price has basically sort of made, made moves, or it's reacted to it, or let's even just, put some in here, okay, where, I can see this price has just gone sideways there, hasn't it? Just gone sideways, and this is you can see fractals there, okay, and we're just looking at, and it's okay, that's all right. It doesn't have to be perfect, because as you go down to the weekly chart, you'll be able to do it again. You can start to look at it and refine and tighten up the levels as you see them, so that they are clear, because we want to be interested in what how price is going to react at those particular levels again. And what we can see here is, if I just zoom out here, let's zoom out, is that dollar against Japanese yen, this is a weekly chart. Fabulous trend last year, wasn't it? That was a fabulous trend before we had a significant pullback, okay? Significant pullback, a significant downtrend. But what we're interested in here is that, we had a low here at the start of the year, then this low was higher, and this low was higher, okay? And actually, if you look at the weekly, the weekly candles, most of those, they've been getting, those lows have been getting higher, and we broke above these recent highs, okay, recently, and we're back up above the 50, and that's just telling me that, that there is a, an uptrend getting back in place there, okay, an uptrend back in place against the dollar, against the Japanese yen. If I look down to the daily chart, yes, it's a little bit scruffy here, but once again, this is kind of a double bottom on the daily chart, okay, followed by a bit of a flag pattern, and the 50 is acting as support, another double bottom there. And what we've seen is, as I said, we've broken out of those highs. And these last few weeks, we have seen actually bond, price has been, that's been dollar strength and Japanese yen weakness, which when we get onto the watch list next week, we can see why that has been occurring. And then if go down to the 4-hourly chart, well, let's have a look at this. 4-hourly chart has also been, having had a couple of scruffy weeks, and that's fine, even trending markets. Well, we can see once again, we had good strong trends, we've pulled back, okay, into areas here and then we've had, we've had pullbacks, we've had pin bars, basically, as the price has basically moved up. And this week, what we've done is, we actually looked as if we were putting in another one, but it turned into a double top before we've come down again. And now, we're into the sort of last day of the month, which can always be a little bit thing, and we're around that kind of 140, the big round numbers around there. So I'll probably wait and watch to see how this pivots around for the rest of the day, and then have a look tomorrow, okay, where we set, where we look at it, because it has been to see how the price action is. We've been in an uptrend on the weekly, uptrend in the daily. We've still been an uptrend in the 4-hour, and I'll look to see if that will continue, okay. And if it does, well then, remember what I was saying, I want to ride it, okay. But until I get that clarity, I won't do that. Okay, ladies and gentlemen, unfortunately, as always, we've overrun a little bit. I do apologise. I've tried to fit in as much as I possibly can each week on a session to give you lots to be able to take away or even basically learn if you're watching this later on the Admirals YouTube channel. All right. I hope you found that useful. As I said, it's a start. We're going to be doing quite a few sessions on just refining and improving every element to our price action trading plan, to help you build a tighter, more focused one to help you in your own price action trading journey. As I said, I think there'll be a feedback form that will come out after this. By all means, feel free to give us some thoughts and comments. We always appreciate that. As always, I wish you the best of success in your own trading, ladies and gentlemen. Remember, next week we're going to talk about watch lists. How do we create them and how do we plug them in to our overall trading plan? And I look forward to speaking to you then. Until then, trade well, everybody. Have a great trading week, and I'll speak to you soon. Cheers.